Hi, I am Anna. I come from www.ntvforex.com. Brexit things will change from January 1, 2021 analysis http ntvforex.com news ID D04894814 2021 12:29 p.m. Even after the latest round of negotiations between the EU and the United Kingdom in mid-July, there was little progress. According to EU chief negotiator Barnier, the deadlock even continued in crucial areas. These were the securing of a uniform framework for competition, above all through uniform standards and rules for state subsidies, as well as fishing rights in British territorial waters. Furthermore, it also fails in general. While the EU is striving for a comprehensive agreement, the British side wants to work through the thematic blocks individually. The transitional period during which EU law applies in the United Kingdom ends on December 31. So, the clock is ticking, which reminds us of last autumn. At that time, a solution was found in October and a hard Brexit was avoided. The danger of a delayed hard Brexit, with the exception of Northern Ireland, is now again on the agenda. The negotiations are extremely complex and touch on a wide range of issues. For example, the European Commission has listed 100 areas for which the necessary preparations have been specified. It is impossible to predict what the outcome of the negotiations will be in detail. In some very important areas, however, there will be disruptions in any case, regardless of whether or not the future relationship between the EU and the United Kingdom can be redefined in a new treaty. This distinguishes the current situation from that of a year ago. The option that everything should remain as it is not on the table this time. At the end of June, the deadline for applying for an extension of the transitional period expired and the British side repeatedly confirmed the end of the transitional period at the end of 2020. We will briefly outline here a few areas in which there will be significant changes from January 1, irrespective of the outcome of the negotiations. From January 1, 2021, goods traffic between the EU and Great Britain will in any case be subject to customs clearance. An agreement could only prevent or reduce customs duties or quotas. Thus, the handling of the exchange of goods will take more time and effort. Only the first few weeks of the new year will show whether both sides have prepared themselves sufficiently for this. Production with closely timed supply chains is particularly susceptible to disruptions. In addition, in future, excise duties will have to be cleared when goods cross the border to and from Great Britain. A further trade obstacle is created because certifications and attestations from British authorities for products imported into the EU lose their validity. In future, these must be available from authorities based in the EU. In the future, EU exports that contain inputs from Great Britain will lose their originating status. This means that they can no longer be exported on more favorable terms to countries with which a preferential agreement exists. EU companies must also adapt to this, possibly by changing their supply chains. For the exchange of services, January 1, 2021, will also bring far-reaching changes. The financial sector will be particularly affected. However, based on a study by the ECB, together with the supervisory authorities and the preparations already made, the European Commission sees risks to financial stability in only one area, namely the central settlement of derivatives clearing. This risk is to be countered with a temporary equivalence decision. What will be the impact on the economy? It will probably not be possible to assess this until it is clear in which areas agreement can be reached on a successor arrangement. Uncertainty over this could lead to higher exports, but also imports and inventory buildup in the EU in the fourth quarter, which on balance could be a temporary positive effect. At the same time, investments could suffer. The trading volumes affected by the end of the transition period are not insignificant. The European Union exported goods worth €314 billion to the United Kingdom in 2019. This represented 2.2% of GDP and 6% of total EU exports. Vehicles, machinery, and electrical machinery accounted for the largest share. The EU imported €184 billion from the United Kingdom. The highest shares were machinery, petroleum, and related products and vehicles. The EU exported €122 billion in services to the United Kingdom and imported €148 billion from there. So far, the markets have been dominated by the COVID-19 pandemic and all the consequences that have resulted from it. As a result, relatively little attention has been paid to the foreseeable effects due to the definite expiry of the transitional period. However, this should change if there is no further progress in negotiations. In our forecasts, we assume that the negotiations will at least succeed to the extent that strong effects on the economy and thus the markets are avoided. However, the risks are considerable and are currently not sufficiently perceived by the markets. NBSP download the full week ahead. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD/JPY drops to fresh daily lows near 106.50 after USD.NTVForex.com news ID D481835 minutes ago by Aaron Senghezer. USD/JPY extends its daily slide in the early American session. Retail sales in the US rose less than expected in July. US dollar index loses traction, edges lower toward 93.00. The USD/JPY pair came under renewed bearish pressure in the early American session on Friday as the USD lost its strength after the latest macroeconomic data release from the US. As of writing, the pair was down 0.35% on a daily basis at 106.53. USD weakens after retail sales report. The data published by the U.S. Census Bureau showed on Friday that retail sales in the U.S. rose by 1.2% to $536 billion in July. Although this reading came in worse than the market expectation for an increase of 1.9%, the initial market reaction provided a modest boost to risk sentiment with S&P 500 futures turning positive on the day. Commenting on the data, all in all, upbeat retail sales figures alongside other robust statistics are good news on their own, but they could eventually become bad news by discouraging politicians from acting, said NTV Forex analyst Yohai Elam. The US dollar index DXY, which rose to 93.40 earlier in the day, lost its traction after the data and caused USD/JPY to turn south. At the moment, the DXY is down 0.15% on the day at 93.10. Later in the session, industrial production, capacity utilization, and the University of Michigan's Consumer Confidence Index will be the last data releases of the week from the U.S. Meanwhile, the 10-year U.S. Treasury bond yield is down 3.15% on a daily basis, making it difficult for the pair to stage a rebound. Technical levels to watch for USD/JPY overview today. Last price 106.57 today, daily change 0.36 today, daily change percent 0.34 today, daily open 106.93 NBSP trends daily SMA 20 106.12 daily SMA 50 106.86 daily SMA 100 107.24 daily SMA 200 108.14 NBSP levels. Previous daily high 107.05, previous daily low 106.56, previous weekly high 106.47, previous weekly low 105.3, previous monthly high 108.16, previous monthly low 104.19, daily Fibonacci 38.2%, 106.87, daily Fibonacci 61.8%, 106.75, daily pivot point S1 106.65. Daily pivot point S2 106.36, daily pivot point S3 106.16, daily pivot point R1 107.13, daily pivot point R2 107.34, daily pivot point R3 107.62. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. retail sales robust figures to risk critical stimulus, causing a crash moving forward. ntvforex.com news ID 300D356 minutes ago by NTV Forex team. U.S. retail sales beat expectations on almost all measures. Upbeat retail sales figures alongside other robust statistics are good news on their own, but they could eventually become bad news by discouraging politicians from acting, according to Forex's analyst Yohai Elam. NBSP key quotes a V-shaped recovery. That is what retail sales figures for July reflect for the U.S. economy, and that was already seen in June. Overall expenditure increased by 1.2% last month, while below 1.9% expected. It was more than compensated by an upward revision to June's figures. Moreover, the all-important control group A core of the Korea, which is used in growth calculations, is up 1.4%, better than 0.8% projected, and also here, on top of an upward revision the robust recovery is sales is a result of massive government support which kept consumption in line with an economy running on full employment, according to Michael Gapin of Barclays. While the slowdown is seen in the figures, the positive marks may turn negative without additional help. Republicans and Democrats let the July 31st deadline lapse without a deal. Trump's executive orders stipulate only $300 week and have yet to be implemented. Support to small business and states is unclear. The current figures may encourage lawmakers to claim that additional assistance is unnecessary, or can be further reduced. The results of pulling support away will be seen only later in August, and most probably only in September. By then, more Americans could lose their jobs and temporary position losses could turn permanent. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Long-term bonds outperforming tech analysis. http ntvforex.com news ID D0B935814 2021 17:34 p.m. YDD. The iShares 20-year Treasury bond TLT is up 21.55% as of August 13, 2020. YDD. The tech-heavy Nasdaq 100 is up 23.80%. During troubled times and low interest rates, bond buying would be considered a safer investment vehicle, and many seasoned traders hopped on board during the coronavirus pandemic, and are now sitting pretty. TLT broke out of its multi-year rising channel during the early part of March this year as the broad markets began their decline. Could this breakout be the precursor for the start of an uptrend? Perhaps, what with a steady decline in interest rates and low U.S. government yields, adding TLT to your portfolio might not be such a bad idea. Observe and monitor price behavior at 1-amp-2. If TLT manages to avoid falling back into the multi-year rising channel, it could indicate further buying pressure. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Week ahead vaccine hopes torment yen, all eyes on Congress video analysis. http ntvforex.com news ID FA5CA8814 2021 07:36 p.m. ETA a relatively quiet week, with the main highlights being the Eurozone SPMIS and the latest FOMC minutes. In the political arena, American and Chinese negotiators will meet over the weekend to review the phase-only trade deal. For markets though, the most crucial drivers will be whether U.S. lawmakers can break the deadlock in the stimulus negotiations, and whether enthusiasm around a vaccine will keep pushing global yields higher, crushing the yen. Will markets have to scream first, before Congress delivers? Vladimir Putin stunned financial markets this past week, after he announced that Russia has developed the first successful coronavirus vaccine. Coupled with some signs that U.S. inflation may be picking up, that pushed global bond yields higher, leaving the Japanese yen as the biggest casualty in the FX market. Since the Bank of Japan has a yield curve control strategy in place that effectively keeps a ceiling on Japanese yields, the yen becomes less attractive in an environment where global yields are rising. Interest rate differentials are crucial for the FX market, so if US yields are climbing but Japanese ones can't really participate, relative rates move in favor of the dollar and make it more appealing. While dollar-yen did advance, the dollar still lost ground against other major currencies, which likely comes down to uncertainty around whether Congress will deliver a new stimulus bill. Another element that may be holding down the greenback is the optimistic mood in stock markets, which have so far remained resilient to the stalemate in Congress. It sounds contradictory to say that the dollar is feeling the heat of this uncertainty, yet stocks arena tea, but keep in mind that stocks are being powered higher by the tsunami of liquidity the Fed has unleashed whereas the dollar isn't. Which brings us to the key point. Stock markets seem to be calculating that a stimulus deal will arrive soon, because the stakes are too high. No politician wants to be blamed for shattering the recovery with an election scheduled in 12 weeks. Yet, the negotiations are going nowhere as neither side feels the urgency to compromise, and the longer this impasse lasts, the bigger the risks for the recovery. This begs the question: will stocks have to sell off first before politicians feel enough pressure to get a deal done? Fed minutes to provide clues for September beyond any updates from Congress. The key release in the US next week will be the minutes of the latest FOMC meeting on Wednesday. The Fed took no action in July but noted that high-frequency indicators suggest the recovery lost some steam, thanks to the spike in infections. The message was that if this persists, more action might be necessary. This is what the minutes are expected to reveal. How concerned are policymakers about this slowdown, and come September, what are they likely to do? The most likely next step is to strengthen the forward guidance, by committing to not raise rates again until inflation reaches or slightly overshoots the 2% target. Strong signals this might be implemented soon could weigh on the battered dollar, but perhaps not much, as it wouldn't be any surprise. Another driver for markets may be the meeting between US and Chinese officials to review the phase-only trade deal. China hasn't bought as many US agricultural products as this deal envisaged, which normally would spell risks of re-escalation. However, Trump's top economic advisor said lately that China's purchases are really good number so that risk seems low. There is also a political angle here. Trump needs US farmer votes in key battleground states to win re-election, so he can't afford to blow this deal up. The US market PMIs for August are also out on Friday. Eurozone PMIs crucial for continuation of Euro rally in Euroland. The preliminary PMIs for August will be released Friday as well. Forecasts point to an uptick in the manufacturing index but a decline in the much larger services sector. That would be a worrisome sign, as much of the Euro's rally has been predicated on the assumption Europe will recover faster than most economies, especially the US. Technically speaking, the most important near-term signal will be whether euro-dollar can break above the $1.19 zone, which rejected the pair twice already. A third failure may open the door for a substantial correction, especially when considering that the trend in European American infections has started to turn. Daily US infections are still far higher than Europe's, but if one strips out the absolute numbers and just looks at the trend, America is slowing down while Europe is sadly accelerating again. If this contagion trend continues, the narrative that Europe will out-recover the US might take a beating soon. The minutes of the latest ECB meeting are also out on Thursday, though this is usually not a market mover. British and Canadian data in the spotlight. Both the United Kingdom and Canada will release inflation and retail sales data next week, on exactly the same days. Wednesday brings CPI numbers for July out of both countries, ahead of retail sales on Friday. In the UK, the pound has staged a remarkable rally, capitalising mostly on a weaker dollar, stronger risk appetite, and improving domestic data. But unless the dollar continues to collapse, it's difficult to envision this rally stretching much further. Since UK inflation expectations remain much higher than those for the US or Eurozone, Britain now has the lowest real interest rates in developed markets by far, which is typically anathema for a currency over time. As for Canada, the loonie has been an outlier this year. It has recovered since the March meltdown, but to a much smaller degree than other commodity currencies like the Aussie or Kiwi, despite a powerful rebound in oil prices. Its lackluster performance is likely owed to America. Around 3/4 of all Canadian exports are destined for the US, so if the US recovery is stalling, Canada will feel the heat. Yet, there is reason for optimism too. The currency's underperformance so far implies greater scope to strengthen going forward, once the US virus situation is brought under control, something also supported by CFTC positioning data that show large speculators are still net short the loonie. Finally, Japan's GDP data will hit the markets early on Monday, ahead of inflation numbers for July on Friday. That said, the yen hardly responds to data. What will truly matter is whether the recent spike in global yields continues, or not. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. EUR/USD flirts with session highs near 1.1830 http ntvforex.com news ID 594,784 minutes ago by Pablo Piavano. EUR/USD gains further momentum and prints daily highs. US retail sales expanded 1.2% MOM during July. US industrial production expanded 3.0% MOM during last month. Further weakness in the greenback is helping EUR/USD to advance to the area of daily highs above 1.1830. EUR/USD focused on data. USD Dynamics EUR/USD is now posting gains for the fourth consecutive session, managing to leave behind the 1.1800 barrier as the selling pressure in the dollar keeps building up. The unremitting bid tone in the risk complex sustains the upside in the pair, which remains well supported on a weekly basis by the 1.1700 neighborhood Wednesday. Earlier in the session, flash GDP figures showed the euro area is expected to have contracted 12.1% QoQ during the April-June period and around 15% from a year earlier, both prints matching the preliminary readings. In the US calendar, headline retail sales expanded at a monthly 1.2% while core sales expanded 1.9% inter-month. Additional data saw industrial and manufacturing production expanding 3.0% MOM and 3.4% MOM, respectively, in July. Later, the flash gauge of the UMich index for the current month will close the weekly calendar. What to look for around EUR/USD pushed higher and recorded new highs near January 1920 earlier in the month, subsequently sparking a corrective downside that met solid contention in the 1.17 region for the time being. The July-August rally, while largely triggered by broad-based dollar selling and improved sentiment in the risk-associated universe, found extra sustain in auspicious results from domestic fundamentals, which have been in turn supporting further the view of a strong economic recovery following the coronavirus crisis. Also lending wings to the momentum around the euro appear the recently clinched deal on the European Recovery Fund which helped putting political fears within the bloc to rest for now and the solid position of the current account in the region. EUR/USD levels to watch at the moment. The pair is gaining 0.10% at 1.1824 and a breakout of 1.1864 weekly high August 13 would target January 1916 2020 high August 6 en route to January 1996 high May 14, 2018. On the other hand, the next support is located at 1.1711 weekly low August 12 followed by 1.1695 monthly low August 3 and finally 1.1495 monthly high March 9. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. industrial production expanded by 3% in July as expected. NTVForex.com News ID 3CB0FD 7 minutes ago by Aaron Sengezer. Industrial production in the U.S. rose 3% in July as expected. Capacity utilization improved more than expected in the same period. Industrial production in the United States expanded by 3% on a monthly basis in July, the Federal Reserve reported on Friday. This reading followed June's increase of 5.7% revised from 5.4% and came in line with the market expectation. Additional takeaways: manufacturing output continued to improve in July, rising 3.4%. NBSP, the largest gain in July, 28.3%, was registered by motor vehicles and parts. Factory production elsewhere advanced 1.6%. Capacity utilization for the industrial sector increased 2.1% in July to 70.6%, a rate that is 9.2% below its long-run 19728 2019 average but 6.4% NBSP above its low in April. Market reaction: the US dollar index largely ignored this report and was last seen losing 0.15% on a daily basis at 93.10. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP USD refreshes weekly tops, inching closer to mid 1.3100 http ntvforex.com News ID BE0F596 minutes ago by Haresh Menghani. GBP USD caught some fresh bids on Friday and was supported by a combination of factors. The latest optimism over the upcoming Brexit talks extended some support to the sterling. The USD remained depressed amid uncertainty over the next round of the stimulus measures. The GBP-USD pair continued scaling higher through the early North American session and refreshed weekly tops, around the 1.313035 region in the last hour. Following the previous session's intraday pullback of around 60 pips, the pair caught some fresh bids on the last trading day of the week and was being supported by a combination of factors. The British pound remained well supported by improving sentiment on Brexit trade talks, especially after Britain's chief negotiator David Frost said on Thursday that an agreement can be reached in September. On the other hand, the US dollar remained depressed in the wake of the impasse over the next round of the US fiscal stimulus measures. Adding to this, a turnaround in the global risk sentiment led to a modest pullback in the US Treasury bond yields, which further undermined sentiment surrounding the greenback. The USD bulls seemed rather unimpressed by Friday's US monthly retail sales report. Data published by the US Census Bureau revealed that retail sales rose by 1.2% in July, short of consensus estimates pointing to an increase of 1.9%. The disappointing headline print negated an upward revision of the previous month's reading and stronger than expected figures excluding autos. Meanwhile, the retail sales control group climbed 1.4% in July as compared to 0.8% anticipated. Apart from the mentioned factors, technical buying on a sustained move back above the 1.3100 area seemed to have contributed to the latest leg of a sudden spike over the past hour or so. Hence, some follow-through strength, back towards retesting the recent swing highs near the 1.3185 region, en route the 1.3200 round figure mark, now looks a distinct possibility. Technical levels to watch: GBP USD overview today, last price 1.3141 today, daily change 0.0074 today, daily change percent 0.57 today, daily open 1.3067 NBSP trends, daily SMA 201.2945 daily SMA 501.2697 daily SMA 1001.2537 daily SMA 2001.2714 NBSP levels. previous daily high 1.3125, previous daily low 1.3031, previous weekly high 1.3186, previous weekly low 1.2982, previous monthly high 1.317, previous monthly low 1.236, daily Fibonacci 38.2%, 1.3089, daily Fibonacci 61.8%, 1.3067, daily pivot point S1 1.3024, daily pivot point S2 1.298, daily pivot point S3 1.2929, daily pivot point R1 1.3118, daily pivot point R2 1.3168, daily pivot point R3 1.3212. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://me.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Aussie waivers as RBA Governor predicts slower Australian recovery analysis. http ntvforex.com. News ID E1F44 F8 14 2021 35:06 p.m. The Australian dollar was little changed today as investors reacted to a statement by Governor Philip Lowe and mixed data from China. In a statement to a parliamentary panel, Governor Lowe said that the country's economy was unlikely to recover until the third quarter of the year because of the new outbreak in Victoria, a state responsible for about a third of the Australian economy. He said that people and businesses are likely to remain more cautious on their spending, which will affect consumption and investment. He also said that he preferred a weaker Aussie, which will help spur employment. The Australian dollar also reacted to mixed data from China. According to the Statistics Office, the country's retail sales dropped by 1.1%, which was lower than the median estimate of a 0.1% growth. The country's industrial production rose by 4.8%, lower than the median estimate of 5.1%. At the same time, fixed asset investments declined by 1.6% while house prices rose by 4.8%. China's growth has been relatively strong in recent months. It rose by 5.3% in the second quarter while the US contracted by more than 32%. The euro was little changed as investors reacted to the Eurozone's economic data. According to Eurostat, the Eurozone's economy contracted by an annualized rate of 15% in the second quarter. It dropped by 12.1% on a quarter-on-quarter basis. In the quarter, payrolls increased by 155k while in June, the trade surplus increased to $21.2 billion from the previous $9.4 billion. Other data released earlier showed that the French consumer prices increased by 0.8% in July, a modest improvement from the previous month's 0.2%. NBSP Euro-USD. The Euro-USD pair is trading at 1.1800, which is an important psychological level. The price is along the 50-day exponential moving averages and slightly above the 100-day EMA. The moving average of oscillator has dropped to the negative zone. The price is also between the important support and resistance of 1.1713 in January 1910. Therefore, the pair is likely to remain in the current holding pattern during the American session. NBSP AUD-USD. The AUD-USD pair was little changed today as investors reacted to the statement by Philip Lowe. The pair is trading at 0.7140, which is slightly below this month's high of 0.7242. On the daily chart, this price is between the middle line of the Bollinger Bands. The signal and main line of the MACD are declining. Also, the price is on the right shoulder of the head and shoulder pattern. Therefore, the price is likely to break out lower as bears target the next support at 0.7000. NBSP USD-JPY. The USD-JPY pair declined to an intraday low of 106.68, which is the lowest it has been since yesterday. On the 4-hour chart, the price is between the 38.2% and 50% Fibonacci retracement level. Meanwhile, the RSI has dropped from the overbought level of 70 to the current 55. The pair is likely to continue falling as bears target the next support at 106.50. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://me.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold price analysis eyeing two upside targets as a busy week draws to an end. A confluence detector. ntvforex.com news ID DC156B 1 minutes ago by Yohai Elam. Gold has been extending its recovery in a relatively quiet fashion after a turbulent week that saw a surge before a drop. XAU-USD NBSP has shown its resilience to the most recent rise in U.S. bond yields, providing encouragement for the bulls. The NBSP Technical Confluences Indicator NBSP is showing that gold has substantial support at $1,932, which is the meeting point of two powerful Fibonacci lines, the 23.6% 1 month and the 61.8% 1 day. NBSP another defense line awaits at $1,946, which is the convergence of the Bollinger Band 1-day middle, the Fibonacci 38.2% 1 day, the BB 15 minutes lower, and more. NBSP looking up, the first upside target is $1,961, which is the confluence of the previous weekly low and the BB1H upper. NBSP further above, $1,972 is a juncture of levels including the simple moving average 104H. The pivot point 1 week support 1 key XAU-USD resistances and supports confluence detector. The confluence detector finds NBSP exciting opportunities using technical confluences. NBSP The TC is a tool to locate and point out those price levels where there is a NBSP congestion of indicators, NBSP moving averages, Fibonacci levels, pivot points, etc. Knowing where these congestion points are located is very useful for the trader, and can be used as a basis for different strategies. Learn more about technical confluence. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://me.mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Tesla's bull run may be ending. Analysis http ntvforex.com news ID 03B42 F8-14 2021 48:27 p.m. Chaos Clinic for 8/14/2020 NBSP Tesla has been on a tear over the past 20 months. This chart shows that bull move. That move was forecast by the dark red Jupiter energy cycle overlaid on prices. That forecast is a XGO energy forecast, filtered to bring out the longer-term cycle due to Jupiter, the bull planet. XGO is an energy forecast computed only from a stock's first trade date. The ZGO forecast is made by filtering the XGO data with a fixed-length zero-delay filter. The choice of a length based on Jupiter comes from the work of Grace Morris of Astroeconomics. She picks stocks to buy based on the Sun being in the sign of natal Jupiter. The timelines at the top of the chart show two cycles, the Earth-Pluto cycle, and the 8th harmonic cycle of Jupiter. These two cycles synchronize at the 2 points shown. In the TSLA natal chart, Jupiter is near 0 degrees, conjoin Uranus. This point anchors several cycles. It is square natal Sun and Pluto EP timeline. That square is frequency doubled to the 8th harmonic by Venus and Moon. That explains the 8th harmonic of Jupiter. Also on the chart are harmonic vibration levels. Prices followed the first level, then rallied 3 levels, followed by a 2-level decline. Prices then shot up 6 levels. They have now dropped back 2 levels. The forecast decline will probably not be as severe as forecast. Energy forecasts are arbitrarily scaled to price, so do better at forecasting time than price. NBSP This content was published on Dr. Al Larson's NBSP Chaos Clinic NBSP, which you can attend each Friday for free. Drive. Al Larson has developed a complete chaos model of markets, 4 unique courses that let you become a certified chaos trader, some very unique e-mylar fractal pattern overlays, and tools that permit forecasting individual stocks and markets years in advance. You can also sign up for a free weekly email, and attend a free chaos clinic on Fridays. To learn more, click on the author's profile. Be sure to sign up for the free weekly email NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. S&P 500 index opens little changed after mixed US data. ntvforex.com news ID BE44625 5 minutes ago by Aaron Sengezer. S&P 500 is posting small daily losses on Friday. Retail sales in US rose less than expected in July. S&P 500 real estate index trades Indiana the positive territory. Wall Street's main indexes started the NBSP day little changed on Friday as investors assess the latest macroeconomic data releases from the U.S. As of writing, the S&P 500 was down 0.25% on the day at 3,364. The Dow Jones Industrial Average was losing 0.45% at 27,767 NBSP, and the Nasdaq Composite was falling 0.15% at 11,163. Earlier in the day, the U.S. Census Bureau's monthly report revealed that retail sales in July rose by 1.2% to $536 billion and fell short of the market expectation of 1.9%. Other data from the U.S. showed that industrial production expanded by 3% as expected, and the capacity utilization improved from 68.5% to 70.6%. Among the 11 major S&P 500 sectors, the defensive real estate index is posting small daily gains. On the other hand, the consumer discretionary index is down 0.35%, pressured by the less than expected increase in retail sales. S&P 500 chart daily. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US UOM Consumer Sentiment Index improves modestly to 72.8 in August. ntvforex.com news ID B3AB244 minutes ago by Aaron Sengezer. Consumer sentiment in the US improved modestly in July. NBSP US dollar index stays deep in the negative territory, a little above 93.00. The consumer sentiment index in the US improved slightly from 72.5 in July to 72.8 preliminary August, the University of Michigan's latest surveys of consumers showed on Friday. This reading came in better than the market expectation of 72. Further details of the publication showed that the current economic conditions index fell to 82.5 from 82.8, and the index of consumer expectations edged higher to 66.5 from 65.9. Commenting on the survey, the overall confidence in economic policies fell to the lowest level since Trump first entered office, NBSP noted Richard Curtin, NBSP surveys of consumers chief economist. NBSP The policy gridlock has acted to increase uncertainty and heightened the need for precautionary funds to offset lapses in economic relief programs and to hedge against fears about the persistence and spread of the coronavirus as the school year gets underway. Market reaction: the US dollar index paid little or no mind to this data and was last seen losing 0.17% on a daily basis at 93.08. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. US dollar index survives above 93.00. Focus on UMICT. ntvforex.com news ID 3B1E07 minutes ago by Pablo Piavano. DXY loses momentum but keeps business above 93.00 so far. US headline retail sales expanded 1.2% during July. Flash consumer sentiment came in at 72.8 for the month of August. The US dollar index DXY, which gauges the buck versus a bundle of its main competitors, remains on the defensive near the 93.00 mark at the end of the week. US dollar index focused on data, risk trends. The index is consolidating the leg lower after failing once again to surpass the vicinity of the 94.00 mark earlier in the session. In the same line, yields of the US 10-year note recede from recent tops above the 0.72%. The dollar is therefore on the way to close the 8th consecutive week with losses, always on the back of the prevailing preference for riskier assets and shrinking odds for US lawmakers to pass a bill on a new stimulus package. In the data universe, July's headline retail sales expanded 1.2% mom and 1.9% mom when comes to core sales. In addition, industrial production rose 3.0% from a month earlier and capacity utilization ticked higher to 70.6%. Further data saw the advanced UMH index expected to rise to 72.8 in the current month. What to look for around USD? The index stays on the defensive after being rejected once again from the 94.00 region earlier in the week. Looking at the broader picture, investors remain bearish on the dollar against the usual backdrop of a dovish Fed, the unabated advance of the pandemic and somewhat diminishing momentum in the economic recovery, whereas persistent US-China effervescence appears on the supportive side of the greenback. On another front, the speculative community remained well into the negative territory for yet another week, supporting the view that a serious bearish trend could be shaping up around the dollar. US dollar index relevant levels at the moment. The index is losing 0.18% at 93.07 and faces immediate contention at 92.93 weekly low August 13 followed by 92.52 2020 low August 6 and finally 91.80 monthly low May 18. On the flip side, a break above 93.99 weekly high August 3 would aim for 94.20 38.2% Fibbo of the 2017-2018 drop and then 96.03 50% Fibbo of the 2017-2018 drop. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Amid a pandemic, retail sales hit all-time high. Analysis http ntvforex.com news ID 9B84484142022 039 PM. Despite a headline miss, underlying details in today's report were better than expected and prior data was revised higher. Services spending may remain under pressure, but retail sales activity has fully recovered. NBSP V-shaped recovery is complete, at least for retail sales. Retail sales missed on the headline expectation, but only because categories that have been doing well gave up gains. Underlying components actually did much better than expected. Control group sales grew 1.4%, which was more than the 0.8% that had been expected and came on the heels of an upward revision that lifted June's gain in this category to 6.0%. In short, the details of today's retail sales report offer the latest evidence of the V-shaped recovery in consumer goods spending. Keep in mind that for the overall economy, outlays on services are roughly twice as large as goods and the recovery in services has been slower. But these figures for July put the aggregate level of retail sales 1.2% above the pre-recession peak set in January. For consumer goods spending, the recovery is over as spending levels are back to record highs. The question now is to what extent those gains may prove fleeting as generous jobless benefits fade and as spending eventually shifts back into service categories. While overall retail sales pushed forward, some retailers saw sales give back some of their recent gains. NBSP auto sales disappoint. Auto sales held back the overall pickup in retail sales. Sales of autos gave back some of their recent gains after a 9.1% surge in May. Auto dealers saw sales slip 1.2% in July. Excluding autos, retail sales were up 1.9%, exceeding the consensus expectation of 1.3%. The autos line is known to move around in the revisions, but for now it looks as though after a banner June, auto sales were not quite as brisk in July. Still, as a whole, it has been a good year. Auto sales are up 6.1% from a year ago. NBSP. What happened to Summer Rec? In a recent note, Summer Rec, we talked about how many sporting goods and hobby shops had been cleaned out in recent months as many consumers sought to purchase basketball hoops, trampolines, and anything else to keep the kids busy, with many camps closed this summer. After soaring 27.6% in June, sporting goods stores saw a 5.0% give back in July. NBSP. Well, actually a pretty nice little Saturday planned. Another category that had momentum coming into the month and fizzled a bit was building material and garden supply stores. A walk around any suburban street on the weekend this summer will attest to the newfound interest in yard work for homeowners without much else to do. This category, which includes stores like Lowe's and Home Depot, saw sales shoot up 13.7% in May and June, before giving back 2.9% here in July. Perhaps as some parts of the service sector reopened, people found something else to do with their time on the weekend. Note, however, that this category has not only recovered, it is up 6.8% versus its pre-recession peak. Download the full economic indicators. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. No, working from home did not spark a surge in productivity analysis. http ntvforex.com news ID 312797 8/14/2022 08:53 p.m. Productivity jumped 7.3% annualized in Q2 as lower productivity sectors were disproportionately hit by the pandemic. Despite an overstated bounce in Q2, a near-term cyclical boost should keep inflation pressures tame. NBSP smoke and mirrors. The second quarter's surge in productivity is virtually meaningless in the midst of the historic declines in both output and hours worked. Instead, the 7.3% jump underscores the massive compositional shifts in the economy over Q2. The near standstill of the leisure and hospitality sector, which before the pandemic accounted for 4.7% of output but 8.3% of hours worked, meant output shifted in Q2 to more productive sectors. NBSP don't read into surge in unit labor costs. Plummeting output sent unit labor costs ULCs soaring 12.2% in Q2. After the dust settles over the next few quarters, however, we expect a subdued trend in ULCs. Continued slack in the labor market should slow the pace of wage growth. At the same time, productivity should remain relatively buoyant compared to hours worked, since rehiring lags output. That should keep a lid on inflation for some time to come. NBSP. Download the full economic indicators. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Philly Fed Survey US Q3 unemployment rate seen at 10.0% versus previous forecast of 12.9%. http ntvforex.com news ID 336,079 5 minutes ago by Aaron Sengezer. The U.S. economy is expected to expand by 19.1% in the third quarter, the Federal Reserve Bank of Philadelphia's latest survey showed on Friday. This figure NBSP followed a 10.6% growth forecast announced in the previous survey. Additional takeaways: US Q4 GDP growth seen at 5.8% vs previous forecast of 6.5%. Payrolls seen growing average 2,068,600 month in Q3 vs previous forecast of 2,328,900 month. Payrolls seen growing average 398,500 month in Q3 vs previous forecast of 900,900 month. Q3 unemployment rate seen at 10.0% vs previous forecast of 12.9%. Q4 unemployment rate seen at 9.5% vs previous forecast of 11.0%. Market reaction: the US dollar index edged slightly higher in the last minutes and was last seen losing 0.09% on the day at 93.17. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Gold remains on the defensive, around $1,945 area at ntvforex.com. News ID 2E751C 5 minutes ago by Haresh Menghani. Gold edged lower on Friday amid optimism over the U.S. economic recovery and COVID-19 vaccine. A combination of factors extended some support and helped limit any deeper losses, at least for now. Investors now look forward to a crucial weekend meeting between the U.S. and Chinese trade officials. Gold extended its sideways consolidative price action through the early North American session and remained confined in a range, around the $1,945 region. The precious metal struggled to capitalize on its goodish rebound from the $1,862.63 region, or three-week lows set on Wednesday, and witnessed some selling on the last trading day of the week. The downtick was sponsored by emerging signs of the U.S. economic recovery and the optimism over a potential vaccine for the highly contagious coronavirus diseases. However, the emergence of some fresh selling around the U.S. dollar helped limit any deeper losses for the dollar-denominated commodity, at least for now. The USD bulls remained on the defensive amid the uncertainty over the next round of the U.S. fiscal stimulus measures and failed to gain any respite from Friday's mixed U.S. retail sales figures. Apart from a weaker greenback, a turnaround in the global risk sentiment as depicted by a fall in the equity markets further underpinned the precious metal's safe haven demand. The anti-risk flow was reinforced by a weaker tone surrounding the U.S. Treasury bond yields, which extended some additional support to the non-yielding yellow metal. Despite the supporting factors, the commodity lacked any strong bullish conviction as investors now seemed reluctant to place any aggressive bets ahead of a crucial weekend meeting between the U.S. and Chinese trade official. Hence, it will be prudent to wait for a sustained move in either direction before positioning for any meaningful trading opportunities. Technical levels to watch: XAU USD overview today, last price 1948.08, today daily change 5.52, today daily change percent 0.28, today daily open 1953.6, NBSP trends daily SMA 20 1943.84, daily SMA 50 1834.49, daily SMA 100 1765.44, daily SMA 200 1651.94, NBSP levels: previous daily high 1966.36, previous daily low 1912.94, previous weekly high 2075.32, previous weekly low 1960.67, previous monthly high 1984.8, previous monthly low 1757.7, daily Fibonacci 38.2%, 1945.95, daily Fibonacci 61.8%, 1933.35, daily pivot point S1. 1922.24, daily pivot point S2 1890.88, daily pivot point S3 1868.82, daily pivot point R1 1975.66, daily pivot point R2 1997.72, daily pivot point R3 2029.08, NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. Justice Department disrupted multi-million-dollar fuel shipment by Iran bound for Venezuela. NTVForex.com News ID 17155B 1 minutes ago by Aaron Seng-Ezer. The U.S. Department of Justice DOJ announced on Friday that the U.S. disrupted a multi-million-dollar fuel shipment by Iran's Revolutionary Guard bound for Venezuela. Additional takeaways from the statement: executed a seizure order by a U.S. court and confiscated cargo totaling approximately 1.116 million barrels of petroleum from 4 vessels. After enforcement of the U.S. forfeiture order, Iran's Navy forcibly boarded an unrelated ship in an apparent attempt to recover seized petroleum. Action was the U.S. NBSP government's largest ever seizure of fuel shipments from Iran. With the assistance of foreign partners, seized property is now in the U.S. NBSP custody. Market reaction: crude oil's reaction to this development was largely muted. As of writing, the barrel of West Texas Intermediate WTI was down 0.65% on a daily basis at $42.05. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. retail sales details offer the latest evidence of the V-shaped recovery in consumer goods spending. A Wells Fargo ntvforex.com News ID 23F2761 1 minutes ago by Mata as Salord. In July, retail sales in the U.S. rose 1.2%, below expectations. Analysts at Wells Fargo point out that despite a headline miss, underlying details were better than expected and prior data was revised higher. They consider services spending may remain under pressure, but see that retail sales activity has fully recovered. Key quotes: NBSPA retail sales missed on the headline expectation, but only because categories that have been doing well gave up gains. Underlying components actually did much better than expected. The details of today's retail sales report offer the latest evidence of the V-shaped recovery in consumer goods spending. Keep in mind that for the overall economy, outlays on services are roughly twice as large as goods, and the recovery in services has been slower. But these figures for July put the aggregate level of retail sales 1.2% above the pre-recession peak set in January. For consumer goods spending, the recovery is over as spending levels are back to record highs. The question now is to what extent those gains may prove fleeting as generous jobless benefits fade and as spending eventually shifts back into service categories. While overall retail sales pushed forward, some retailers saw sales give back some of their recent gains. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Will credit markets pull stocks down or not? Analysis http ntvforex.com News ID EBA 712814 38:26 p.m. Another day, another attempt at the Feb highs, and the upper knots of S&P 500 candlesticks give the daily chart a bearish look. How justified is that? Are stocks about to move seriously lower? In today's analysis, I'll present the outlook based on the many charts featured. NBSP SP 500. In the short run, I'll start with the daily chart perspective. The S&P 500 didn't make it far yesterday, and both the upswings and downswings have been rejected. The volume declined, which means that most market participants are largely sitting on the sidelines. However, this could spange in a heartbeat. Will the bears be as strong so as to send the bulls packing? According to the credit markets, it's a close or not so close tie. Have your pick. NBSP. The credit markets point of view: high-yield corporate bonds HYG ETF recovery fizzled out yesterday, and prices closed at new lows. Does the high volume mean the bears are getting started, or that a meaningful accumulation is underway? The next few days will be telling, especially when I look at investment-grade corporate bonds LQD ETF. Please see this and many more charts at my home site. They haven't found a bottom yet as the last 5 trading days in a row show. Both leading credit market ratios, a high-yield corporate bonds to short-term treasuries HYG-SHI and investment-grade corporate bonds to longer-dated treasuries LQDIEIA, are currently pointing down. Will the investment-grade bonds find the way higher first, just as they did in May or June, and will that be enough to promptly turn around their junk counterparts? The overextension of the S&P 500 black line relative to the HYG-SHI ratio is even more striking now. But stocks still continue to defy gravity. Will a resolution with a stock move lower or ratio S move higher follow? I am leaning towards the latter, in its time that might be closer at hand than the bears think. NBSP small caps, emerging markets, and other clues. The Russell 2000 IWM ETF is holding up quite well relative to the 500 strong index. No sign of profit distribution here. Neither the emerging markets EM ETF are signaling danger after outperforming since the start of July. They're taking a breather currently. The daily market breadth chart caption says it all. The deterioration is visible, and the question remains, when would the bulls step in? Remember, the bullish percent index remains solidly in bullish territory, making corrections likely to be bought, and stock price action hasn't shown us that it's willing to roll over in earnest though. The metal with PhD in economics dollar copper has given up this week's gains, yet yesterday's lower knot indicates that the bulls have stepped back to a degree. That increases the probability that once trading leaves this flag, they will do so with a break higher. NBSP summary. Summing up, yesterday's S&P 500 session leaves stocks extended relative to the credit markets, and neither long-dated treasuries are signaling an immediate turnaround just yet. Much depends upon today's trading in the debt instruments, and I think that the worst of the decline there is past, and that higher prices would follow and help put a floor behind the relatively very extended S&P 500 versus HYG-SHI. The same goes for the S&P 500 market breadth indicators, where I also see stabilization followed by an upswing in the advanced decline line as the more probable scenario. And that means that the bulls better approach any trading opportunities with tight trade parameters, just as I did throughout many recent sessions, because the air near the Feb all-time highs is quite thin. NBSP want free follow-ups to the above article and details not available to 99% investors. Sign up to our free newsletter today. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Will credit markets pull stocks down or not? Analysis. http ntvforex.com. News ID E2B6238142022 55:20 p.m. Another day, another attempt at the Feb highs, and the upper knots of S&P 500 candlesticks give the daily chart a bearish look. How justified is that? Are stocks about to move seriously lower? In today's analysis, I'll present the outlook based on the many charts featured. S&P 500 in the short run. I'll start with the daily chart perspective charts courtesy of http://stockcharts.com. NBSP. The S&P 500 didn't make it far yesterday, and both the upswings and downswings have been rejected. The volume declined, which means that most market participants are largely sitting on the sidelines. NBSP. However, this could spange in a heartbeat. Will the bears be as strong so as to send the bulls packing? NBSP. According to the credit markets, it's a close or not so close tie. Have your pick. The credit market saw point of view high-yield corporate bonds HYG ETF recovery fizzled out yesterday, and prices closed at new lows. Does the high volume mean the bears are getting started, or that a meaningful accumulation is underway? NBSP. The next few days will be telling, especially when I look at investment-grade corporate bonds LQD ETF. Please see this and many more charts at my home site. They haven't found a bottom yet as the last 5 trading days in a row show. Both leading credit market ratios, a high-yield corporate bonds to short-term treasuries HYG-SHI and investment-grade corporate bonds to longer-dated treasuries LQDIEIA, are currently pointing down. NBSP. Will the investment-grade bonds find the way higher first, just as they did in May or June, and will that be enough to promptly turn around their junk counterparts? The overextension of the S&P 500 black line relative to the HYG-SHI ratio is even more striking now. But stocks still continue to defy gravity. Will a resolution with a stock move lower or ratio S move higher follow? I am leaning towards the latter, in its time that might be closer at hand than the bears think. Small caps, emerging markets, and other clues. The Russell 2000 IWM ETF is holding up quite well relative to the 500 strong index. No sign of profit distribution here. Neither the emerging markets EM ETF are signaling danger after outperforming since the start of July. They're taking a breather currently. NBSP, the daily market breadth chart caption says it all. The deterioration is visible, and the question remains, when would the bulls step in? Remember, the bullish percent index remains solidly in bullish territory, making corrections likely to be bought, and stock price action hasn't shown us that it's willing to roll over in earnest though. The metal with PhD in economics dollar copper has given up this week's gains, yet yesterday's lower knot indicates that the bulls have stepped back to a degree. That increases the probability that once trading leaves this flag, they will do so with a break higher. Summary: summing up, yesterday's S&P 500 session leaves stocks extended relative to the credit markets, and neither long-dated treasuries are signaling an immediate turnaround just yet. Much depends upon today's trading in the debt instruments, and I think that the worst of the decline there is past, and that higher prices would follow and help put a floor behind the relatively very extended S&P 500 versus HYG-SHI. The same goes for the S&P 500 market breadth indicators, where I also see stabilization followed by an upswing in the advanced decline line as the more probable scenario. And that means that the bulls better approach any trading opportunities with tight trade parameters, just as I did throughout many recent sessions, because the air near the Feb all-time highs is quite thin. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Canada recovery likely continued into July, but pace to slow. ARBC http ntvforex.com news ID 9695A9 3 minutes ago by Mata as Salord. Canadian manufacturing sales jumped a record 20.7% in June. Nathan Jansen, senior economist at RBC Economics, points out the recent significant gains in manufacturing sales and other economic indicators has been a bounce back from unprecedented declines. They that beyond this initial bounce, the pace of recovery will likely moderate. Key quotes: NBSPA. The nearly 21% jump in manufacturing sales built on a close to 12% increase in May. The bounce back in sales to date has been somewhat stronger than expected. The June increase itself was a little stronger than Statistics Canada's preliminary estimate of a 16.8% increase. Much of the initial recovery in manufacturing sales to date, as in the broader economy and labor markets, has been a bounce back from unprecedented declines into April as virus containment measures eased. Beyond this initial bounce, the pace of recovery will still likely moderate. Given tight links between the Canadian and U.S. manufacturing sectors, the difficulties south of the border in getting additional government stimulus spending passed, and the still elevated pace of virus spread, there are added downside risks. Persistently weak investment in the oil and gas sector will also act as a longer-lived drag on manufacturing output. The near-term bounce back in economic activity has been encouraging, but the economy is still operating well below capacity, and very likely still will be at the end of the year. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. GBP USD weekly forecast recovery time: robust UK retail sales, dovish Fed, May send sterling up analysis http ntvforex.com news ID 778008142023 12:42 p.m. GBP USD has been retreating amid dollar strength and concerns about the US economy. NBSP UK retail sales, Fed minutes, and coronavirus developments are eyed. NBSP mid-August's daily chart is painting a mixed picture. NBSP The FX poll is pointing to cable holding up in the short term before a rise afterward. Diverging disease curves across the Atlantic can explain part of cable's slide, yet other factors such as rising US yields and worries about Britain's furlough scheme were also in play. Is the pendulum about to swing in the other direction? UK retail sales, the Fed's minutes, and coronavirus are in focus. NBSP this week in GBP USD NBSP The UK's unemployment rate remained at 3.9% in June, a remarkably low level, courtesy of the government's successful furlough scheme. The program that keeps workers attached to their employees while paying them most of their salaries is set to expire in October. Rishi Sunak, Chancellor of the Exchequer, stated that the scheme is unsustainable and that many people will lose their jobs. His dire words took the sting out of sterling's gains. July's rapid 94,400 increase in jobless claims also weighed. Relatively good news came out of gross domestic product figures for the second quarter. The British economy shrank by a historic 20.4% in the 3 months ending in June, yet that beat estimates. Moreover, June's increase of 8.7% has shown that reopening is boosting the economy. NBSP further moves depend on beating coronavirus. Russia's announcement of registering the world's first COVID-19 vaccine was met with skepticism but serves to redouble efforts to defeat the disease. NBSP UK coronavirus cases continue moving higher, while they are showing tentative signs of falling in the US. Nevertheless, America's situation remains far worse. NBSP source FT These initial signs of improvement in the US may have contributed to politicians' lack of urgency in providing more relief to the US economy. Republicans and Democrats remain at loggerheads with time passing by and millions of unemployed Americans receiving a cut to their benefits. NBSP President Donald Trump signed an executive order decreeing a top-up of $300 week to those out of work, half of the previous payment, and that money is yet to be distributed. Lower fiscal spending pushed bonds yields higher and safe haven flows boosted the greenback. NBSP in politics, Democratic challenger Joe Biden chose Senator Kamala Harris as his running mate, a decision in line with most analysts' expectations. Harris is considered a pragmatist and elevating her status seemed to have no substantial market implications. Trump NBSP Sino-American tensions have remained elevated, yet the focus shifted from Hong Kong, Britain's former colony, to Taiwan. China upped the ante, sending a fighter jet closer to the island while America's Health Secretary Alex Azar was in Taipei. However, markets focused on the trade deal and talks around it, which seemed satisfactory. NBSP overall, the dollar gained ground. NBSP UK events retail sales could be a bright spot. Coronavirus developments remain of high importance. Pound traders will want to see the disease remaining under control even if cases continue rising. Any new local lockdowns may weigh on sterling. Prime Minister Boris Johnson aims to reopen schools in September and any delay would also cause suffering. On the other hand, if infections fall, the pound has room to rise. Investors have low expectations for any Brexit breakthrough. With the recent round of US-UK over, for now, that front will likely remain quiet as well. NBSP The economic calendar kicks off with CPI figures on Tuesday. As in other places, inflation has dropped in the wake of COVID-19 and has likely remained depressed. Headline CPI stood at 0.6% yearly in June, and no substantial changes are likely in July. NBSP consumption has recovered faster than the broader economy according to official retail sales figures for June and also independent measures from Barclaycard and the British Retail Consortium for July. Updated expenditure data is due out now with July's retail sales. Will the volume return to that seen last year? The option is remote, but cannot be ruled out, NBSP especially given the government's furlough scheme. NBSP Market's preliminary purchasing managers indexes for August are also set to show ongoing expansion, A scores above 50. The large services sector is in the spotlight. NBSP. Here is the list of UK events from the NBSP NTV Forex NBSP calendar. US events. Fed minutes in focus. Is the US beginning to turn a corner against coronavirus? While the infections curve is clearly off the peak, deaths remain at an elevated level. A consistent drop in the 7-day rolling average is needed to confirm the trend and provide hope. Vaccine news will also be of interest after Russia's announcement propelled the global race to develop immunization into a higher gear. Hopes may boost the market and weigh on the greenback. NBSP. The Democratic National Convention kicks off in Milwaukee, and mostly online amid the disease. The party conferences usually boost the party, holding them in the polls, but these have been stable of late, showing a solid lead for challenger Joe Biden. Markets are more interested in what Congress does in Washington. Investors assume lawmakers will eventually strike a deal, but every day that passes without new relief is weighing on the economy. If officials settle for a small package, it would hurt the economy and also Trump's chances. A larger boost would boost the economy and the president's probability of holding on to power. NBSP. The highlight of the economic calendar is the Federal Reserve's meeting minutes from the July meeting. Back then, the Fed expressed concern about the recent downturn following the resurgence of coronavirus cases from mid-June. Will the minutes unveil even greater worries, or will it convey a message of stability? NBSP. It is essential to note that the document is not a raw protocol of deliberations but a thoroughly edited publication, with officials considering a market response. NBSP. Apart from the Fed minutes, building permits are of interest, and weekly jobless claims statistics remain essential high-frequency figures. Initial claims are for the week ending August 14, when non-farm payrolls surveys are held. NBSP Market's preliminary August PMIs and existing home sales have the last word of the week and are set to show stability. NBSP. Here the upcoming top US events this week. GBP USD technical analysis. The relative strength index on the daily chart is still flirting with 70, moderately overbought. Momentum remains positive and GBP USD is trading above the 50, 100, and 200-day simple averages. All in all, the picture is not 100% bullish. Immediate levels to watch are 1.3060, which was a temporary cap in August and also before the pandemic, and 1.3145, which was a temporary peak. NBSP. More significant resistance is at 1.32, a swing high before March's crash. Further up, 1.3270 was a high point in January, and it is followed by 1.3350 and 1.3510. NBSP. Strong support is at 1.2985, August's low. GBP USD neared that level later in the month. Further down, the next level to watch is 1.2870, a support line from February. It is followed by 1.2815 and 1.2700. The latter is where the 50-day SMA and the 200-day one converge. NBSP GBP USD sentiment. NBSP. The pendulum may now swing in favor of the pound, as the US economy slows down and upbeat UK retail sales may send sterling higher. NBSP. The NBSP NTV Forex forecast poll. NBSP is showing that experts expect stability in the upcoming week, followed by drops afterward. The long-term target has been upgraded while the expectations have remained stable for other time frames. NBSP related reads 2020 elections. Kamala Harris set to damage Donald Trump's chances in 5 ways. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Your USD weekly forecast. Caution hits volatility. More action ahead. Analysis. http ntvforex.com. News ID EEB 600814-2023 15:48 p.m. Political turmoil paused this week. Focus shifted to pandemic-related headlines. Minutes from the Fed and the ECB next week could bring back speculation. EUR/USD holds on to its long-term bullish bias. Minor diverges appeared these days. Market players took a cautious approach this week, leaving EUR/USD confined to familiar levels. For a second consecutive week, the pair is closing with modest gains above the 1.1800 level, as investors struggled to find a directional catalyst, despite the enthusiasm triggered by last week's U.S. data and the executive orders signed by U.S. President Trump on fiscal stimulus. Politics pause, coronavirus uproars these days. The U.S. Congress made no progress in the stimulus bill, meant to replace the one that expired on July 31. Also, there were no fresh news related to the U.S.-China relationship, at least not those that could impress investors. Regarding the ongoing pandemic, there are at least 6 promising vaccines in stage 3 of testing, and Russia even registered its own, despite tests are incomplete. However, the number of global new coronavirus cases has picked up, with Europe fearing a second wave is already there. In the US, the number of cases has stabilized above 50,000 new cases per day, although testing has receded, putting at doubt the headline number. Globally, the 7-day moving averages in new cases and daily deaths had picked up after being stable for most of July. Travel bans and localized lockdowns are hitting multiple economies, which means economic recoveries continue to be delayed. The greenback, in the meantime, suffered a major setback midweek after a record auction of U.S. Treasury bonds sent debt lower and yields higher. Still, it fell short of moving EUR/USD away from its previous week's range. Within these scenarios, it is hard to decide, not which currency is the strongest, but the less weak speculative interest has chosen to remain sidelined ahead of some clearer clues. Macro data hints a slow path to recovery. European data released these days failed to impress. The EU Q2 gross domestic product was confirmed at 12.1% according to the second estimate, while Germany's CPI remained depressed, meeting the previous readings in July. Industrial production in the Union shrank in June, while the only encouraging figure was the German ZEW survey, which showed that economic sentiment continued to pick up in August, although the assessment of the current situation deteriorated. US data, on the other hand, was generally encouraging. Inflation beat expectations in July, with the core annual reading improving to 1.6% from 1.2%. Also, initial jobless claims fell to 963,000 in the week ended August 7, the first time below 1 million since the coronavirus pandemic took its toll on the economy. The headline reading of July retail sales missed expectations, as sales were up by 1.2% in the month vs the 1.9% expected. Sales ex-autos, however, improved to 1.9%, while retail sales control group surged 1.4%, beating the expected 0.8%. Finally, the preliminary estimate of the Michigan Consumer Sentiment Index for August resulted at 72.8 from 72.5 in July, providing a modest lift to the market's mood at the end of the week. The upcoming week will bring little of interest until the end of it. Both the U.S. Federal Reserve and the European Central Bank will publish the minutes of their latest meeting. On Thursday, speculative interest will focus on U.S. unemployment claims after the nice surprise from these days. On Friday, market will publish the preliminary estimates of its August PMIs, expected to remain within expansion levels at both shores of the Atlantic. EUR/USD technical outlook. The weekly chart for the EUR/USD pair suggests that the rally is not yet over. The pair is above the 23.6% retracement of its July-August rally at 1.1740, having briefly fallen below it. In the mentioned time frame, the pair keeps developing far above all of its moving averages, with the 20 SMA aiming to surpass the 100 SMA, both below the 200 SMA. Technical indicators hold with an overbought reading with uneven directional strength but without signs of upward exhaustion. In the daily chart, a firmly bullish 20 DMA continues leading the way higher, providing dynamic support and now nearing the mentioned Fibonacci support. Technical indicators, however, are drawing some bearish divergences that are yet to be confirmed. The momentum heads firmly lower within positive levels, nearing its 100 line. The RSI has retreated from its recent highs and is stable at around 65. The first relevant support level is 1.1710, this week low, followed by the 38.2% retracement of the mentioned July-August rally at 1.1635. A break below this last could see the pair approaching the 1.1500 level before buyers reappear. The weekly high at 1.1863 is the immediate resistance ahead of the year's high at January 1915. Once beyond this last, the pair has room to extend its advance to January 2000. NBSP Euro USD Sentiment Poll. The NTV Forex Forecast NBSP poll. NBSP shows that the market has turned bearish on Euro USD, as those betting for a decline are a majority in all the time frame under study. Even further, bearish interest increases as time go by, with 46% of the polled experts favoring declines in the weekly view and 57% in the quarterly perspective. Most experts are seeing the pair ranging throughout August, with chances turning south afterwards. On average, the pair is seen at 1.1822 in the shorter term, down to 1.1650 in the 3-month view. In the overview chart, moving averages have turned flat in all the time frames under study. NBSP NBSP NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD Weekly Forecast. Aussie losing its shine alongside gold analysis. http ntvforex.com. News ID 66D8408142 23:34 p.m. The number of new coronavirus cases in Australia continues to grow. The path to economic recovery is turning bumpier for Australia. AUD/USD is losing bullish momentum, but there are no signs of an upcoming decline. The AUD/USD pair is ending the week as it started at around 0.7160, after spending the week confined to a tight 80 pips range. Unimpressive Australian data was combined with resurgent coronavirus cases in the country, limiting the bullish potential of the pair. Coronavirus and gold. The latest coronavirus-related data shows that the number of daily cases picked up, although most new infections continue to center in Victoria, which began a lockdown at the beginning of August. Health Minister Greg Hunt said on Thursday that he was cautiously optimistic on early signs of a flattening curve, adding, however, that the lockdown in Melbourne could extend in time and to other areas. A slump in gold prices also undermined demand for the Aussie. The bright metal plunged from its record high of $2,075.19 a troy ounce to $1,862.43 in a matter of days, to later stabilize in the $1,950 price zone. The huge decline, however, was merely corrective, as gold added $600 ever since the lockdown began mid-March. Market players were neither interested in the greenback, affected by the lack of progress in Congress related to a stimulus aid package, and tensions with China. Both issues moved to the background these last few days, with no major developments after U.S. President Trump's executive orders on fiscal stimulus. However, as the week comes to an end, U.S. Secretary of State Mike Pompeo hinted more action coming on China, beyond the ban announced on the TikTok app. The news could fuel risk-off, particularly if more headlines escalate the situation during the weekend. Australian economy still in trouble. The Australian macroeconomic calendar showed that the NABA's Business Confidence Index plunged to 14 in July from 1 in June. The country also reported the Q2 Wage Price Index early on Wednesday, which was up by 0.2% in the quarter, and rose 1.8% when compared to the second quarter of 2019. That would be the slowest pace of growth on record, and the weakest reading since the records began in September 1997. As per employment data, Australia recovered 114.7k job positions in July, while the unemployment rate increased by less than anticipated to 7.5%. China published encouraging inflation data, as the annual CPI surged to 2.7% in July. Other numbers, however, disappointed as industrial production in the same period increased by 4.8% while retail sales fell 1.1%, both missing the market's forecasts. Generally positive U.S. data, on the other hand, fell short of boosting the American currency. The upcoming will bring some Australian relevant macroeconomic figures, starting on Tuesday with the RBA meeting minutes. On Wednesday, the country will publish the July Westpac leading index, previously at 0.44%. Early Friday, the country will see the release of the preliminary August Commonwealth Bank PMIs. AUD-USD technical outlook. The weekly chart for the AUD-USD pair shows that the bullish momentum seen in the last couple of months is easing. The pair topped around its 200 SMA, holding below it, but above a bullish 20 SMA and the 100 SMA. The momentum eased further within positive levels, while the RSI remains flat at around 65. In the daily chart, the pair is stuck to a mild bullish 20 DMA, while the 100 DMA is crossing above the 200 DMA far below the shorter one. Technical indicators have stabilized, the momentum within neutral levels and the RSI at 58. The bullish potential receded, but there are no signs of a bearish movement ahead. NBSP. A critical support level comes at 0.706070 price zone, and the bearish case will be firmer if the pair breaks below it. The next natural support is the 0.7000 price zone, followed by 0.6940. Resistances are located at 0.7200 and 0.7240, the high set this month. Gains beyond this last seem unlikely at the time being, although if the pair breaks above it, the 0.7300 level comes at sight. AUD-USD sentiment poll. According to the NTV Forex forecast NBSP poll NBSP, the AUD-USD pair will likely remain above the critical 0.7000 threshold, but no more gains are at sight. Bears are a majority in all the time frame under study, accounting for 60% in the weekly perspective but down to 50% in the quarterly view. In the overview chart, the weekly moving average has turned bearish, as most targets accumulate just below the current level. The monthly moving average retains a modest bullish slope, while the larger one turned flat. In all the cases, the number of possible targets shrank from the previous week, mostly hinting some consolidation ahead. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Airlines hit hard by new quarantine rules analysis. http ntvforex.com news ID 05F6D8814 2023 8 p.m. Stocks have failed to maintain bullish momentum seen earlier in the week, with disappointing data from China and the US denting recovery expectations. Meanwhile, airlines are on the back foot, with fresh quarantine rules sparking another raft of cancellations. European stocks lead the declines, as the week ends with a whimper data from China and the US stifle recovery hopes. Airlines under pressure as quarantine on French visitors brings a swathe of cancellations. The S&P 500 moved further away from record highs, with stocks throughout Europe and the US ending the week on a sour note. Weaker than expected retail sales and industrial production data eased hopes of a V-shaped recovery after sharp gains throughout June. With a wide-ranging stimulus package seemingly some way off as things stand, investors may have to bide their time if they are expecting another US-led surge in stocks. Coming off the back of a disappointing set of Chinese data points overnight, we are certainly seeing a slowing recovery despite the initial post-lockdown rebound. Airlines are under pressure once more, with the likes of IAG, EasyJet, Ryanair, and Dart Group all being hit hard after the UK imposed quarantine rules on travellers returning from France and the Netherlands. With EasyJet already cancelling all holidays to France, this step is just the latest in setbacks for the travel sector. While many airlines have managed to build a substantial liquidity buffer in a bid to stave off collapse in the event of further travel restrictions, we are still looking at a sector which will likely emerge with substantially more debt and shares on issuance. From a US perspective, we are likely to see the sector come under pressure as we approach the October 1 deadline when $25 billion of existing US payroll aid comes to an end. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Travel stocks hit an air pocket on new quarantine rules analysis. http ntvforex.com news ID 9DC98E814 2023 PM Europe. It has been a disappointing end to the week for European stocks, with travel stocks bearing the brunt after the UK decided to add France, the Netherlands, and Malta to its list of quarantined countries, over concerns about rising infection rates in all three countries. Add into that the even more juvenile retaliation by the French government, and the recipe for disaster is complete, as the travel sector has to absorb yet another headache, as the holiday season in Europe starts to unravel even further, against a backdrop of isolated infection flare-ups across the entire region. If European governments were hoping to salvage something tangible from the 2020 summer holiday season, these recent setbacks are unlikely to help, and with the days getting shorter, the window for buying time for the finances of countries like Spain, Italy, and Greece is starting to close. In Spain, there is rising concern that increasing infection rates could prompt a second lockdown, if the current new measures which restrict nightclub openings, as well as drinking and smoking in the streets, don't stem the rise in cases. British Airways owner International Consolidated Airlines is the worst performer on the FTSE 100, while EasyJet, Ryanair and TUI have also underperformed on the mid-cap index, while in Europe we've seen Air France KLM and Lufthansa also slip back sharply. The setback over the new quarantines overshadowed the news that EasyJet had been able to conclude the successful conclusion of the sale and leaseback program of 23 aircraft, which has helped generate an extra A608M, on top of the other A1.8 BN which the airline has raised since the beginning of the coronavirus pandemic. Other shares linked to the aviation and travel sector are also sliding, with BP and Royal Dutch Shell under pressure over lower demand expectations, along with Rolls-Royce, which has slipped back as well. On the plus side, Hollywood Bowl shares have jumped after the UK government eased restrictions on the reopening of bowling alleys, and other leisure venues where you can socially distance, along with beauty salons and spas. NBSP US markets have opened broadly softer, just shy of record highs, NBSP ahead of the resumption of US-China trade talks this weekend. The latest retail sales numbers for July painted a mixed picture of the US consumer, showing a monthly gain of 1.2%, slightly below expectations. However, the upward revision to June from 7.5% to 8.4% more than made up for that, while the control group measure, which is used to calculate GDP, rose by more than expected to 1.4%. All in all, the numbers were all over the place, which tells you little about the overall state of the US economy, apart from that it is continuing to recover from the effects of the shutdown in April, albeit on a patchier scale than expected. Industrial production for July showed a slight slowdown from June, coming in at 3%. Tech stocks are underperforming, with Apple shares slipping back from yesterday's record highs, after the company was accused of monopoly abuse by Epic Games, makers of the Fortnite game, after the app was removed from the App Store. The company has taken out a lawsuit claiming abuse of power against the US tech giant, and it is hard to argue that the company doesn't have a case. There is rising disquiet amongst app developers that Apple is abusing its position as a marketplace for innovation by charging up to 30% fees, in an area that is becoming an increasingly important revenue earner for the Cupertino giant. The increasingly onerous rules the likes of Apple, as well as Google, place on their app stores is generating increasing disquiet amongst the users of its marketplaces, as well as attracting the attention of US and EU regulators. With Spotify also complaining of Apple's practices in this area, it is hard not to detect a trend that could embolden other brands in respect of Apple's practices, which in turn could force the company to take steps to offset some of these concerns, before regulators force them to do so. FX: the pound appears to be finishing the week on an upbeat note, while the euro has slipped back after the latest employment data for Q2 showed that the euro area had lost half of the jobs it had created since the financial crisis, as the number of people employed fell 2.8%. The Japanese yen has also been gaining ground ahead of the release of its latest Q2 GDP numbers early next week. Despite a brief rebound early in the week, the US dollar has continued to struggle, and could well close at its lowest level in over 2 years against a basket of currencies, largely as a result of underlying pessimism over a possible conclusion to stimulus talks on Capitol Hill. NBSP commodities oil prices are also slightly softer, although they still look set to finish the week higher, as gains get tempered over concerns about a weaker demand outlook, particularly around air travel, where future demand expectations have been dialed back this week by OPEC, the IEA, and the EIA. NBSP gold prices have stabilized after their first weekly decline since May, and could well fall further in the event that yields continue to rise. This week has seen a big rise in US, UK and German yields, and while there appears to be differing views as to why, a continued move higher in these yields could dilute the current attraction for the yellow metal as a haven play in the short term. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. The week ahead: FOMC minutes, UK retail sales, public finances, flash PMIs, Cineworld, Persimmon, and Walmart earnings analysis. http://ntvforex.com. News ID 689442 8/14/2023 30:13 p.m. 1 NBSP FOMC minutes. A 1908 A NBSP. Last month's Fed meeting was notable for what was done outside of it once again, with the U.S. Central Bank NBSP announcing that it would be extending its central bank and U.S. dollar repo and swap lines until the end of March next year, as a precautionary measure to ensure the smooth functioning of financial markets. While monetary policy was left unchanged, it was quite apparent from Fed Chair Powell's comments that the Fed was trying to get ahead of any possible economic deterioration, while also acknowledging that current events are likely to remain largely out of their hands, and dependent not only on the overall course of the virus, but also on any further fiscal action from U.S. politicians. Powell's comment that the Fed needed to hope for the best but prepare for the worst could as easily have been aimed at Capitol Hill, and the partisan nonsense going on there, as to the probable stop-start nature of how the virus will affect life in local communities, and the implementation, as well as lifting of lockdown measures in response to future outbreaks. Powell also made clear that the Fed was in this until we well through ETA, which suggests that there probably was some discussion of an extensively easy monetary policy and how long it might last. We'll also get to find out how close the Fed is to a policy of yield curve control, as we look ahead to what would have been the Jackson Hole Symposium, but which will now be held virtually with the theme Navigating the Decade Ahead: Implications for Monetary Policy on August 27 NBSP and 28 2 NBSP UK Public Finances July 2008 NBSP. The last 3 months have seen the UK government borrow over £100 billion, an exceptional post-war intervention to support an economic shock that will reverberate for years to come. In April we saw a 47.8 billion followed by another a 44.7 billion in May, as the UK Treasury paid the wages of over 8 private sector employees. In June that number came in at another a 34.8 billion, while the number of jobs getting government support has risen to over 10 A number of UK companies have since said they would be repaying the help they received from the UK government, which is welcome news and may make it easier for Chancellor of the Exchequer Sunak to look at extending the furlough to the most vulnerable sectors of the economy. At some point the UK government will still have to look at how they intend to pay for all of this, but for now, with 2- and 5-year yields in negative territory and 10-year yields below 0.25%, it is not something they need to be too concerned about right now. We're still expecting to see a big number in July. However, the total amounts don't appear to be rising as quickly as originally thought. While it won't stop UK borrowing from moving above 100% of GDP, the Chancellor could well afford to be a little more flexible given that the total amounts borrowed haven't been as high as originally thought. 3 NBSP UK retail sales July 2008 NBSP. After the big declines seen at the end of Q1 and beginning of Q2, we've seen a decent rebound in the months of May and June with respect to consumer spending. There has been without doubt weak spots, but we've also seen big improvements in food sales along with DIY, as well as a surge in online activity, even as non-essential shops reopened in the middle of June, followed by hairdressers, pubs, and restaurants at the beginning of July. The rebounds of 12% in May and 13.9% in June are all the more welcome given that unlike the US, infection rates in July have been fairly stable, which along with some decent weather should see more positive, if a little cautious, retail activity, as we head into August. 4 NBSP US weekly jobless claims A2008 NBSP having initially hit their lowest levels since late March a couple of weeks ago, there had been some concern that the rise in virus cases during the second part of July, as well as the cliff edge of the drop-off of the $600 a week enhanced unemployment benefits package would see a spike in claims in the weeks ahead. The latest claims numbers NBSP came in at 963K, dropping below the 1M level for the first time since before the lockdown in early March. Continuing claims also fell back to 15.48M, again the lowest figure since the first week in April. These falls in the levels of claims are more surprising given that there had been much hand-wringing at the prospect of the loss of this weekly $600 unemployment benefit, and the effect it might have on the US jobs market. Yet here we are, 2 weeks into August, and the weekly claims numbers have continued to fall, as have the continuing claims numbers. Of course, that could still change if US lawmakers continue to procrastinate about a future stimulus package. 5 NBSP UK, France, and Germany flash PMIs AUG A2108 NBSP recent PMI data from the UK, Germany and France has seen a continued recovery in economic activity through June and July as businesses have continued to reopen. This recovery has been most evident in the services sector, which bore the brunt of the initial lockdown declines. In the July numbers, UK services PMI improved sharply to 56.5, from 47.1 in June. With restaurants and bars, along with hair salons continuing to reopen and the Chancellor's Eat Out to help out proving very popular, we could well see further improvements in the UK numbers. We've seen similar strong gains in the France and Germany services numbers as well, with France posting a reading of 57.3, and Germany 55.6. Manufacturing has proved to be steadier, having proved to be more resilient, but is still above the waterline in all 3 cases, above the 50 level. The wider question is now that we've still not seen a further relaxation of the rules due to concern over some localized outbreaks, is whether we'll see August activity slip back a touch from their July bounce backs. 6 NBSP Persimmon H120A 1808A NBSP house builders also took a hit because of the lockdown of the UK economy in April. In July, Persimmon provided a snapshot of the effects the lockdown had on its business during Q2. In April, total revenues fell to a 1.19 bn, down from a 1.75 bn in 2019, with completions sharply lower at 4,900. Down from 7,584. On the plus side, average selling prices were modestly higher at a 225k, however higher costs are likely to eat away at overall margins in the months ahead, which could act as a drag on profitability. Much will depend on whether the removal of stamp duty for properties up to a 500k will offset any loss of confidence prospective buyers have about the economic outlook. Recent mortgage approvals data suggests that consumers are becoming much more cautious. There are certainly grounds for optimism if the rise in forward sales that we saw in the wake of retail offices reopening is sustained into the rest of the year. All in all, the outlook looks more promising with respect to demand outside of London, as demand for property further afield helps drive demand in a post-COVID world. 7 NBSP Cineworld H120A2108A NBSP This month's decision NBSP by Disney to push their new cinema release of Mulan straight to their new streaming service Disney is yet another body blow to a cinema industry that was already in big trouble from declining footfall and a slowing global economy at the end of last year. Against this backdrop and its U.S. opening plans in disarray due to U.S. states having to lock down their economies for a second time, and the UK reopenings finally taking place at the end of last month, after being delayed on a number of occasions, the decision by Disney could well be the beginning of the end for a lot of local cinemas who rely on big box office releases to stay afloat. EDA's already costing Cineworld almost $50 million a month in spite of furloughing its staff, and the fear is that any further delays in film studios further delaying their latest releases, along with the requirement to wear a face covering, could see the cinema business start to run out of cash very quickly, if consumers show little enthusiasm for returning. In the last week or so the shares have gone on a run to the upside on potential takeover chatter after a U.S. judge made a ruling that overturned the rules that dictated the release of how films are released in the U.S. Since the 1950s Hollywood had a monopoly on how films could be produced, exhibited, and distributed, a practice that has now had time called on it. This story appears to have taken on an added twist in that last week's ruling could make the beleaguered cinema chain the subject of a takeover bid from a big Hollywood studio, according to recent speculation in a UK newspaper. While it is true that Cineworld shares have taken a battering over the past 12 months, the main reason for the weakness, coronavirus concerns notwithstanding, is the level of the company's debt, which along with its modernization program has placed an enormous strain on its balance sheet. With footfall at record low levels, and likely to remain subdued, there are significant obstacles to a potential takeover, not least how to accurately predict future cash flow in a post-COVID world. 8 NBSP Walmart A Q2 21A 1808 NBSP A In Q1 Walmart saw e-commerce sales rise by 74% as more people shopped online as a result of the COVID-19 lockdowns. While its sales soared during the pandemic, so did its costs as the company employed an extra 200K people to help clean stores, stack shelves, and get online orders out of the door. This extra $900 million in costs did not stop the company turning over $134.6 billion in Q1, as the company continues to compete with Amazon as the one-stop shop of choice in the U.S. retail sector. Walmart also invested an extra $1.2 billion in its Flipkart venture, increasing its majority stake in the Indian operation in order to ramp up its operations there, which have been struggling due to intense competition with Amazon. The consolidation of Walmart's Indian wholesale business into Flipkart's operations will help cut costs there as it seeks to make inroads there. There has also been some chatter in recent months that Walmart was considering its options over its Asda business, from talk of an IPO to selling the business to a private equity firm. These initial discussions, which were confirmed in February, came just about the same time as the coronavirus pandemic had started to hit the headlines and stock markets were close to the bottom of their sharp sell-offs. These talks were said to have resumed in July. However, an IPO seems much less likely now given the even thinner margins facing the supermarket sector in the UK. 9 NBSP Home Depot Q2 21A 1808A NBSP When Home Depot reported its Q1 earnings in May, its profits were dragged down by the costs of having to cope with the extra costs of safeguarding its staff as a result of the pandemic. Revenue for Q1 saw a rise of 7.1% to $28.26 billion, with same-store sales rising 6.4% as consumers stayed home and spent money on their homes. Net income on the other hand fell 10.7% to $2.25 billion as the company doubled overtime payments and weekly bonuses. Another reason for the surge in revenues was a boom in online sales, with the company being seen as an essential retailer during the various lockdowns, which has meant that the company has also had to invest in a lot of part-time workers to make up the extra workload. While costs are expected to continue to rise, the expectation is that the resulting rise in revenues will be able to compensate for that. As such, profits for Q2 are expected to come in much higher than Q1, at $3.44 CA share. NBSP 10 NBSP Nvidia Q2 21A1908A NBSP, another US tech stock that has outperformed the wider market over the past few months. The shares are up over 80% year to date, helped by a combination of outperformance in its data processor business, which has seen revenues surge by a similar percentage amount, but also due to the higher demand for home computers as a result of the rise in home working. The recent rise in cryptocurrencies could also help boost demand for its chipsets as well, with Bitcoin back at one-year highs. NVIDIA SA100 GPU is used by the likes of Amazon, Google, and Microsoft in their respective cloud businesses, where demand has been strong, and is likely to remain that way as all companies look to boost their cloud capacity. NBSP, while most people know the company for its high-performance graphics chips, demand here has also been fairly robust. However, there is a concern is that while video games have become more popular, gaming console demand could slow, given they are expensive bits of kit. This could make the share price vulnerable to a pullback if this week's update falls short in any areas. 11. NBSP Deere Amp County Q3 20A2108A NBSP. When Deere reported its Q2 numbers, the U.S. agricultural equipment maker said that it expected global sales to fall by up to 30% to 40% in Q3, despite beating revenue expectations in Q2. While revenues beat expectations, this was mainly because of the varied measures to cut costs, which has included the laying off of hundreds of workers, replacing higher-paid, more experienced workers with younger and lower-skilled employees. Since those Q2 numbers back in May, the U.S. economy has continued to open up, and the shares have risen solidly from their March lows to be trading at one-year highs. Expectations are for profits to come in at $1.21 CA share. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Consumer saw pivot to goods driving rebound in production analysis. http ntvforex.com. News ID C770584-2023 28 2 p.m. Industrial production rose 3.0% in July. The manufacturing sector has seen a relatively strong recovery this cycle, underpinned by consumers shifting spending toward goods. Business goods have been slower to recover. Consumer goods recovery well underway. The manufacturing sector's recovery continued in July, but at a slower pace. Output at factories rose 3.4% after June's 7.4% gain. Once again, autos led the charge as the sector has seen a relatively quick recovery as consumers shun mass transit. The need to social distance has shifted household spending away from services to goods. Production of consumer products rose 4.6% in July, and is only 2.4% below February levels. Business investment has further to go. Production for business equipment increased 5.0% in July. Gains broadened beyond information processing. Yet, output for business goods has proved slower to recover, with uncertainty about the pandemic and election likely holding back outlays. Mining output rose for the first time in 5 months 0.8% as extraction increased. New drilling, however, remains depressed as crude oil prices have hovered around $40 barrel. Download the full economic indicators. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. USD CAD rises to the 1.3270 area amid a weaker Canadian dollar. ntvforex.com. News ID 255,428 5 minutes ago by Mata as Solord USD CAD hits a fresh daily high at 1.3271 but still heads for a weekly loss. Canadian dollar among weakest currencies on Friday corrects lower after days of gains. The USD CAD rose to 1.3271 during the American session, reaching a fresh 2-day high and then pulled back, holding above 1.3240. Despite rising on Friday, the pair is trading 125 pips below the level it had a week ago. The Canadian dollar is retreating on Friday across the board, trimming a small portion of its weekly gains. It appears to be a normal correction after rising during 5 consecutive days. Data from Canada showed a strong rebound in manufacturing sales. The greenback on Friday is mostly lower across the board. The U.S. July retail sales report and the marginal improvement in consumer sentiment in August did not help the U.S. dollar. The DXY is falling 0.23% on Friday, trading above 93.00, on its way to the lowest weekly close since May 2018. Technical outlook: the primary trend in USD CAD is still pointing lower. A recovery above 1.3270 could alleviate the bearish pressure. The next resistance is seen at 1.3325 July 30, 28 AMP 29 low. On the flip side, a slide back under 1.3240 would export the 1.3200 area that protects the 6-month low it reached on Thursday at 1.3189. USD CAD overview: today last price 1.3254, today daily change 0.0029, today daily change percent 0.22, today daily open 1.3225, NBSP trends daily SMA 20 1.3375, daily SMA 50 1.3488, daily SMA 100 1.3732, daily SMA 200 1.3532, NBSP levels: previous daily high 1.325, previous daily low 1.3192, previous weekly high 1.3451, previous weekly low 1.3234, previous monthly high 1.3646, previous monthly low 1.3331, daily Fibonacci 38.2%, 1.3218, daily Fibonacci 61.8%, 1.3233, daily pivot point S1 1.3192, daily pivot point S2 1.3159. Daily pivot point S3 1.3125, daily pivot point R1 1.3258, daily pivot point R2 1.3292, daily pivot point R3 1.3325, NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Ripple Technical Analysis: XRP USD gets a breakout above 30 cents but fails to keep the price there at ntvforex.com. News ID 700,044. 1 minutes ago, XRP USD was the weakest pair among major cryptocurrencies. XRP finally had another breakout above 30 cents, but bulls could not sustain the move and XRP is now trading at $0.295. XRP has been struggling all year in comparison to other major coins. After the initial breakout on July 22, the digital asset was initially outperforming some cryptos. However, the recent consolidation period has been worse than most. XRP USD daily chart: the good news for the buyers is that XRP has defended the daily 12 EMA and has bounced from it. The daily uptrend is, of course, still intact, but the 30 cents crucial resistance level seems to prevail. NBSP XRP 4 US dollars hour chart: the 4-hour chart has clearly shifted in favor of the buyers after a bullish cross of the 12 EMA and the 26 EMA. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. U.S. industrial production consumer goods recovery well underway. A Wells Fargo ntvforex.com news ID D661825. 5 minutes ago by Mata as Salord data released on Friday showed that industrial production rose 3% in July, in line with market expectations. The manufacturing sector has seen a relatively strong recovery this cycle, underpinned by consumers shifting spending toward goods, explained Wells Fargo's economists. They see that business goods have been slower to recover. Key quotes NBSPA. The manufacturing sector's recovery continued in July, but at a slower pace. Output at factories rose 3.4% after June's 7.4% gain. Once again, autos led the charge as the sector has seen a relatively quick recovery as consumers shun mass transit. The need to social distance has shifted household spending away from services to goods. Production of consumer products rose 4.6% in July, and is only 2.4% below February levels. Production for business equipment increased 5.0% in July. Gains broadened beyond information processing. Yet, output for business goods has proved slower to recover with uncertainty about the pandemic and election likely holding back outlays. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. AUD/USD climbs to daily highs near 0.7170, turns flat for the week. ntvforex.com news ID F929CT 4 minutes ago by Aaron Sengezer. AUD/USD continues to push higher in American session. US dollar index stays in the negative territory after US data releases. AUD/USD remains on track to finish the week little changed. The renewed selling pressure surrounding the greenback helped the AUD/USD pair edge higher in the American session on Friday. As of writing, the pair was up 0.28% on the day at 0.7168. On a weekly basis, the pair looks to close virtually unchanged. USD remains on track to end the week. On a weak note, the U.S. Census Bureau reported that retail sales in July rose by 1.2% on a monthly basis. This reading missed the market expectation of 1.9%. Additionally, the Federal Reserve announced that industrial production in July expanded by 3% in line with analysts' estimate, and the UOM's Consumer Sentiment Index improved modestly from 72.5 to 72.8 in August. Following these data releases, the US dollar index DXY turned south with the 10-year US Treasury bond yield dropping more than 4% on the day. At the moment, the DXY is down 0.15% at 93.11. Meanwhile, Wall Street's main indexes trade little changed on Friday, not providing any clues regarding risk sentiment and allowing the USD's market valuation to remain as the primary driver of AUD/USD's movements. Earlier in the day, the Reserve Bank of Australia's RBA Governor Philip Lowe said that he would like to see AUD's exchange rate lower but noted that the currency was not currently overvalued. Nevertheless, these comments suggest that the AUD's gains could remain limited in the near term. Technical levels to watch for AUD/USD overview today: last price 0.7168, today daily change 0.0020, today daily change percent 0.28, today daily open 0.7148, NBSP trends daily SMA 20 0.7139, daily SMA 50 0.7011, daily SMA 100 0.6723, daily SMA 200 0.6711, NBSP levels: previous daily high 0.7189, previous daily low 0.7135, previous weekly high 0.7244, previous weekly low 0.7076, previous monthly high 0.7228, previous monthly low 0.6876, daily Fibonacci 38.2%, 0.7156, daily Fibonacci 61.8%, 0.7168, daily pivot point S1 0.7126. Daily pivot point S2 0.7103, daily pivot point S3 0.7072, daily pivot point R1 0.718, daily pivot point R2 0.7211, daily pivot point R3 0.7234. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Apple Stock Analysis 2020 by AAPL. Before or after stock split video analysis. http://tvforex.com News ID FE77468142 2023 57:32 p.m. Apple Stock Analysis. Is it overvalued? Is Apple stock a buy now, days after announcing its fifth stock split since 1987 and delivering impressive earnings, or is it way overvalued? How has Apple stock splits impacted its price in the past, and how could it impact it before and after its split? Adjusted trading begins on August 31. Am I adding the AAPL stock to my portfolio, and if so, at what price? How much AAPL do I even have in my portfolio, and what type of investor should be looking into adding the Apple stock to their portfolio? Because as you probably know by now, if you have been following me for a while, investing strategies are not a one-size-fits-all. What works for me may not work for you. That's because I probably have a different risk tolerance than you, my financial situation and goals are likely different than you, and we're probably not the same age and are not married to the same exact person, because that would be weird. In this video, I analyze the AAPL stock from 5 points of my signature Invest Diva Diamond Analysis IDDA, which analyzes any asset from 5 points: fundamentals, technicals, market sentiment, risk assessment, and overall how it can fit in your portfolio, and of course, my most recent price targets. Apple Stock Analysis. A fundamentals. I have been following the AAPL stock for years, and most recently I compared it with its 5G infrastructure competition in this video, so if you haven't watched that already, make sure you check it out. Fun fact: Apple's market value of over $1.9 trillion is bigger than the GDP of Canada, Russia, or Spain. Apple delivered impressive results on July 30 as it announced in its third quarter earnings, and its board of directors has approved a 4-for-1 stock split. The Apple stock split. What does the Apple stock split mean? It means if you have one share of Apple priced at around $400, you are now going to have 4 shares of AAPL, each worth around $100. It's kinda like changing your $20 for 4 $5 bills. It wanna add on to or reduce your net holdings, but it'll give you more bills. NBSP. Why is Apple doing a stock split? In my opinion, the reason why Apple has done it in the past and did it this time, is purely for marketing purposes. Apple has one of the greatest marketing minds behind it, so it kinda makes sense that they extend their talents to their financial department. What the heck does this have to do with marketing, you ask? Well, for one, it's a huge PR boost every time they do this, because more media contributors, including myself, will feel necessary to cover the news. But have you heard of the term, buy the news, sell the rumor? So the news came out on July 31 but when will its impact start to wear out? I'll get to that in a little bit when I look at AAPL stock price action on the charts. NBSP. Back to stock split advantages. Being traded at a lower price could make the Apple stock more approachable. The idea of the Apple stock being super cheap makes it more of a household name, which goes hand in hand with Apple's brand identity as well. Of course, in reality this is absolutely pointless, because you can buy any stock at a fractional amount on brokers like Robinhood, Webull, and TD Ameritrade. For example, even if you have only $50 to invest, you still can buy $50 worth of Amazon stock, which is priced well above $1,000. So this part of it is more about investor psychology than a real fundamental change in the company's valuation. Apple stock market sentiment analysis. Let's now move on to IDA's second point, which is market sentiment. Currently, we have bulls and bears evenly distributed across the market. Apple stock bulls say Apple is not too big to grow even more. The company is still innovating with introductions of Apple Pay, Apple Watch, Apple TV, and AirPods. Each of these could drive incremental revenue, but more crucially help to retain iPhone users over time. Apple stock bears say AAPL stock is way too stable, that would not give investors with high risk appetite an opportunity for great gains. It has the most expensive valuation in a decade. NBSP. Apple is behind firms like Google and Amazon in artificial intelligence, or AI, development, notably Siri voice recognition, which could be problematic as tech firms look to integrate AI in order to deliver premium services to customers. Apple stock price. A technical analysis. The Apple stock price has reached a new all-time high above $460 before the split. In this video, I explain why I have set buy limit orders at $394 and $357. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors. Hi, I am Anna. I come from www.ntvforex.com. Why the pushdown of the gold price? 1 at last analysis. http ntvforex.com news ID 9/38/14/2024 086 p.m. Monumental losses in the gold and silver markets experienced on Tuesday can be attributed to a rigged sell-off according to Andrew Maguire. The precious metals expert reaffirms that, despite the hit, gold and silver's rise is not done yet. NBSP what's happened to the gold price and the silver price? NBSP. The timing and voracity of the sell-off across the gold and silver futures markets suggest rigged market interference, according to precious metals expert, Andrew Maguire. In Andrew Maguire's analysis of the markets, officials orchestrated Tuesday's rigged sell-off to coincide with thin holiday market conditions. The telegraphing of the selling event is evidenced in sell orders that clearly exceed the CFT position limit parameters, which should apply to all trades. Andrew Maguire believes Tuesday's losses represent a coordinated effort from market-making insiders to halt the ascent of gold and silver in its tracks. Why the push down of the gold price will fail? Andrew Maguire sees Tuesday's drop as a dip to be bought, rather than a sign of things to come. By way of explanation, the precious metals expert points to evidence of fresh institutional funds moving into gold. NBSP. More and more hedge fund managers are turning to gold investment, as the stock market balloons near the risky territory of all-time highs. With very few employable hedges to complement or, even, replace treasuries, gold has become the preferred hedging option. NBSP. As these positions are secured to hedge high-risk stock market conditions, they were not taken out by Tuesday's sell-off. Institutional investments are essentially hedging into these positions and, as a result, have no stops. NBSP. When considering the outlook for gold, it's important to distinguish these institutional hedge positions from the flows of speculators. While the visible stops of the speculative momentum-driven positions are susceptible to being flushed, institutional hedge positions aren't going anywhere, as Tuesday clearly demonstrated. NBSP. With stocks testing all-time highs in very risky conditions and fresh risk on related hedging continuing to flow into gold and silver futures, it grows increasingly difficult for officials to create downside traction. NBSP. What can we expect from gold? NBSP. In the days following Tuesday's sink in gold and silver prices, Andrew Maguire's offers a timely reminder that backfilling is part of the course in a bull market. As Andrew Maguire sees it, the pullback of Tuesday is just a step along the way to $2,500 per ounce gold. NBSP. According to Andrew Maguire, the wholesale market footprints evidence that at the $2,500 per ounce price mark, insiders and first-tier banks will be positioned and ready for the upcoming upside re-evaluation. NBSP. Andrew Maguire's parting thought. NBSP. Everything suggests the line is crossed with this reset at $2,500 spot. I can upgrade the silver price at $35 spot, and that will be achieved before the reset. NBSP. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://mt5.expert.advisors.